Okie dokie. All right. We should be live. Luke, can you hear me?
Yes.
Awesome.
How you going?
Yeah, very well, thank you. And yourself?
Good. Crazy week.
It always is. All right. So for those that are tuning in for the first time, welcome to another weekly crypto update with your two hosts. This is myself, I'm Peter In from BlockchainSpace. And on the right, you have Luke from Fortifex. Luke, you want to give a little background on what you do in the space?
So we run a asset management platform in the space. I also have a YouTube channel called Blocksiders, if you want to check that out. And at the moment it's living COVID life, so it's just managing to deal with all that. So at the moment I've been doing a lot of work on as far as from a research perspective on DeFi, and so I've been putting a fair amount of time into that over the past week. So it's been fairly enlightening.
It's a super exciting space right now.
I think it'll be a bit of a bubble for the moment, but I think it'll take a little while for that to burst. But I think we'll see a mini ICO type bubble in this again. But we'll see what happens.
Yeah. So a little intro from my side. So I run BlockchainSpace here in the Philippines. So it's an education hub for blockchain and cryptocurrencies. We've been running it since 2018. We've been doing meetups, webinars, hackathons, workshops, and we are now starting online content to continue our advocacy for kind of sharing knowledge out there and getting more people into the space. So if it's your first time tuning in, hit the subscribe button. If you're on YouTube, hit the like button on Facebook, send us comments, and this session's meant to be interactive, so feel free to send us messages at any time, and we'll get back to you during the course of the show. So as we usually do, I usually start with a couple of slides from my side. So being based here in the Philippines, I always like to share a couple of stories that are happening around here in Southeast Asia or in the Philippines specifically, and then we'll pass it over to Luke to also share some crypto news from his side. So for anything that's kind of been big during the week. All right, so just switching on my slides. Is that working, Luke?
Yeah, I can see that.
Awesome. All right. So there are a couple of updates. Since the last couple of weeks, since we did our last weekly crypto update, something that recently came out is something called PayID. PayID is actually a solution created by an open payments coalition, which includes over 40 leading finance and tech companies, such as Crypto.com, GoPay, Ripple, Blockchain.com, so your traditional kind of companies that are actually using universal identity solutions to be able to create kind of interoperability. So that's a word that you hear a lot in our space, which basically just enables one single login to be accepted on multiple platforms. And what they're trying to do with this is actually they are providing this one single login ID to provide over 100 million customers worldwide to be able to kind of do peer-to-peer payments, make transactions on e-commerce, and also to pay invoices just using that one single login. And that's something very interesting in our space. As you guys can imagine, like there are a lot of wallets out there. There are a lot of different payment methods, and everyone has their own kind of logins and their own systems. So interoperability has always been key to kind of allow one payment provider to accept payments and then cash out on another side. And especially now you can do it kind of globally. So this is a very interesting move. What we say about PayID is it will be as simple as sending money as simply as sending an email. So looking forward to kind of what's to come from there. And from the Philippines side, we see that Coins.ph has joined this Open Payments Coalition. So that's very interesting. Any thoughts on that, Luke? Just inviting you to make any comments.
Oh, sorry. I'm actually just prepping for what I'm talking about. But the PID stuff, no, I think you covered it pretty well. I mean, I'll just cover it up saying that. But yeah, no, it's all good.
Cool.
I think the only thing, if it's, what is it, PID, universal ID for payment? Oh, okay. Is it a token?
It's not. It's just it's an identity solution.
Oh, right. Okay. Well, then, yeah, I mean, I'm pretty sure. I think the only issue with the identity space is that there's so many players, and it's just going to be basically who can get the most influential partners first, and then hope that someone else is also getting influential partners. Because I think that there's not going to be a need to integrate all these identity tokens together. There will just need to be a couple of major players that will automatically integrate, and then you're going to have a worldwide solution. That's the only thing about that space that concerns me.
That's true. That's very true. All right. Moving on to this, my second slide. So I usually do kind of 3 slides and try and keep it light for a Saturday afternoon. But kind of big news here in the Philippines is Binance is getting a bit more exposure in the market and starting to offer other services, namely through their P2P platform. So for those that don't know what P2P stands for, it's peer-to-peer. And what it actually means is they will be, so you have basically individuals or institutions that hold crypto, and they are able to sell their crypto to other individuals, so directly. And in order to be able to do that, so in the past, you've had very popular platforms like Local Bitcoins or Paxful, who basically act as an escrow service. So they basically, they say they either hold your funds or they act as basically the third-party guarantor that allows to before your money to get transferred to the recipient, that actually guarantees that your BTC is safe or your funds are safe before the transaction is complete. So let's say someone tries to defraud you, someone like Binance or Local Bitcoins or Paxful will basically not allow that transaction to go through. So that's why you want to have those third party to basically provide those escrow services. So what's interesting is that this is Binance's kind of first play to kind of offer crypto offerings, so particularly Bitcoin, Ethereum, their own USD stablecoin. Binance, this is USD, and then EOS, but using peso, right? So now what they're trying to do is traditionally the way to actually get into Binance, you actually had to go through a local exchange here. So one of the regulated exchanges, let's say like a Bloom or an SEI, and then you would traditionally, you'd have to go into like a 7-Eleven. You'd have to go to one of their kiosks, say how much you wanted to buy, right? And then you take your, from the kiosk, you take a receipt, go to the cashier, give them cash for the equivalent amount, wait for them to kind of credit your e-wallet. And then from there, you'd have to convert into, from your peso into Bitcoin, right? And then from the e-wallets, then you'd have to send that Bitcoin into Binance. And so obviously Binance is trying to make it much easier to be able to access their, their very vast crypto offering by now just allowing you to purchase Bitcoin straight on their platform, and it will create a wallet directly into Binance, and allow you just to pay peso directly on their platform. So this has a couple of different benefits, a couple of different advantages. Some of them being like they are not charging any fees at the moment, so there's 0 transaction fees, and obviously you have the security of a very large crypto exchange. So Binance being one of the most famous in the space, they've invested a lot into the security of their platform. So as the people that have been in the space for a while will know is that exchanges famously get hacked a lot, right? And whether you don't hear about it or you do hear about it, it's probably happening all the time. And so you need to have very, very high security in terms of like how you actually protect your crypto assets within the exchange. And obviously Binance is going to be one of the most advanced exchanges out there. So you actually have this security, knowing that if you use that platform, that your funds are going to be more or safer, right? They also have this very famous insurance fund, which is called the Seifu fund, which is basically, it protects like a certain amount of assets within the exchange. So in case they do ever get hacked, which has happened in the past, right, that your funds actually are protected, and that they will guarantee that even if those funds are lost, that they will actually cover it. Now, what's also interesting is it provides an avenue for two of the existing exchanges here. So I noted in the article that Bitpin has published here is that it allows two of the local exchanges to actually work together with Binance, and so to increase kind of like more transactions in the space. And these two VC licensed exchanges, so Moneybees and Bloom, actually help to provide actually the crypto that these individuals are going to be purchasing, right? And the great thing about that is obviously these two exchanges are regulated by the BSP and provide a guarantee that the crypto that you're buying is legitimate, and that you actually get the funds. So it's a lot safer to buy from these guys. So it's great to see that. So yeah, any thoughts on this, Luke?
So I just had to unmute myself.
Sure.
Well, I mean, it's good that Binance is becoming I guess a regional player, as in they're not just focused on global. They're sort of opening up offices in local areas, which is good for fiat pairs and things like that, as well as for giving people the trust that if they they're going to get started buying crypto, that at least they can trust Binance as much as, or even more so than lesser known exchanges. So it gives people that little bit of comfort. The biggest issue with Binance coming out and rolling out in all these, pretty much having an office in every country, means that there is a real risk that we will only see one major exchange globally, and they could have a lot of power over the entire industry as the global exchange. And we've seen them do this. We've seen them, use this influence on, community-driven projects like Steam and the Steam and Hive thing, where they use user funds or user tokens to vote because they have access to the tokens, and then they will use their voting their voting ability using tokens that don't belong to the company, that actually belong to their customers, in order to do things for their mates, which is what we saw with Steam with Justin Sun. And that's why, that was the basics of sort of what happened with Steam Hive, and that's why that split happened. So just because they've done it and they regret doing it doesn't mean they won't do it again. And there's a big risk with for the industry. I'm not just trying to say every comment I make is going to be something negative, but the big risk is that when you have the more powerful they get, the higher the chance that there's going to be some form of corruption, because power corrupts, absolute power. And the one thing we don't want to see is one player that just dominates everything, because that will actually be a very, very big negative for the industry, especially because we harp on about the joys of being decentralized, and then when you have 90% of the industry all needed to transact through one centralized global company, it's worse than what we've currently got. So that's the only risk there. So I think if you're new and starting out, by all means, using anything Binance is going to be good. However, it is you always need to be cognizant of the fact that using a non-global domestic exchange that you can trust will be better off for the industry long term.
Yeah, man, and I guess that introduces so many different avenues for the future, like things like DEXs, so decentralized exchanges, where you don't really need to be to.
It is that, but I mean, even Binance is doing their own DEX, and that will alleviate some of the issues. It's sort of if it's all decentralized and they haven't got control of the wallets. But even the Binance DEX, you still don't have. It's still not your wallet. I mean, you still have to input your private key in order to do transactions. So, look, there are. I mean, I'm not saying it's going to be as bad as what happened with Steam, but who knows what will happen when you have we don't want to be in a world, especially crypto. We don't want to be in an industry where the entire industry is reliant on one player. One player that is local, which has, which will have ties to one government. I'm not saying anything about Binance in general, but I mean, for example, you wouldn't want one major dominant player in one location controlling all of the entire crypto industry, or having, and people might say, oh, the users can leave, but we all know what we're like as human beings. Essentially, if 80% of people are using one exchange to do everything, you're not going to be able to get most of those people off that exchange. They're there and they're done. And if the convenience is there and they're feeling lazy, whatever. It's the same thing with any social media platform. We might all get up in arms about the fact that they're using your data to sell you stuff, but 90% of users don't care. Still use Facebook, still use Instagram, whatever. Don't care if they know where I am, what my travel habits are, what my purchasing habits are. Don't care. I'll happily give that information for free so I can tell 18 people about what I had for lunch. So I think that, then that is a risk, because convenience will always trump ideology. So, the one thing I would say is that, I think it's good that Binance is allowing new users to get involved in the industry. But my biggest concern is that by being the first experience that people have, and if they make it good enough, which Binance do, because Binance is a very easy to use platform, they will therefore just own those people. So it means that if you have a token and it's not on Binance, it won't get any attention. And this is maybe in years' time, not saying right now. And the fact that you can have these other decentralized exchanges and Uniswap and it's not Ether Delta and all that's gone, but it was IDEX and all these sort of DEXs and stuff that exist. It just means that there'll be no volume there, that would be significantly lower than Binance and blah, blah, blah. So, but they're doing the right things. They're doing the outreach, they're doing the community stuff. But my concern is then what are we going to be left with in 5 years' time when, 80% of crypto users are all in a Binance account, most of their crypto is stored in Binance. And then what does that mean for a lot of things? What does it mean for mining? What does it mean for staking and control of different blockchains? What does it mean for projects who aren't willing to spend $5 million or don't have these big, overwhelming communities to support them? What does it mean for those projects? It sort of makes things a bit complex. However, at the moment, I think they're good. There's nothing against Binance at the moment. It's Binance in 5 years that I think we have to sort of be a bit concerned about.
Which I'm thinking. There are basically regulators working. There are even global regulators right now, and working groups that are trying to work out how to balance basically the mix of exchanges in the future and how much dominance those exchanges should have. I'm sure it's going to be down to these guys to determine,
but regulators where? Let's be honest. You try to get different countries to work together. We're talking about a global issue, and unless you you're the United States government and you're going to say we're going to ban everyone in our country from using Binance. Everyone will just get a VPN. It's that simple. So, and then if the US does something, it doesn't mean that the Philippines or Australia or Malaysia or Singapore are going to do anything else. So it's a it'll be an interesting one. Look, I mean, I think that there will be bits of that because you don't want to get into an issue of antitrust and one player having a monopoly or whatever. But because of the international like the global scale that we're in with this industry, the fact that it's all over the place and you can be anywhere in the world and do stuff with crypto, and you can be anywhere in the world and have a Binance account, that is going to be the part that makes it challenging to try to properly regulate it.
Yeah, definitely. Something for the new guys that are coming into the space to kind of be very wary of. All right, without dwelling on this too much, I'm gonna go on to my no problem at all. I mean, like this, it should be open and it should be open for commentary. I think this is what the show is all about.
Yeah.
Right. And then so the next slide is something I'm actually personally very, very excited about. And no, it doesn't really have a huge relation to the Philippines itself specifically, but more to the Asian region. So there's this one company called Axie Infinity, who's run by a blockchain venture studio called Sky Mavis, right? And it's a blockchain game that I've been following for over a year now, and these guys are getting a great traction. And so basically, what happened is Sky Mavis and Axie Infinity have actually got accepted into the Ubisoft Strategic Innovation Lab program coming up, which is absolutely huge news for blockchain games potentially going mainstream, right? So for those that want to understand why I'm so excited about this, right? So Ubisoft has, so I guess you guys probably know Ubisoft, and for those who don't know it, it's like they're probably one of the largest gaming, like commercial gaming brands out there. The guys that create basically some of the biggest titles out there, like Assassin's Creed, Rainbow Six, Ghost Recon, and Just Dance, right? And if you have such a large gaming studio looking into blockchain applications, it's kind of signaling, right, that blockchain is very interesting for their space. And I think something that we always share basically in our Bitcoin for Beginners programs, that I will reference Jason, who shows every week how Super Mario can be related to basically virtual currencies. It just shows like how the world has been kind of exposed to these digital currencies for so long now. So if you guys imagine like how long Super Mario's been out there, right? And you're actually so used to kind of dealing with digital currencies, but you just don't know enough about kind of like what cryptocurrencies will do for us in the future, right? And so it's basically taking the blockchain version of Super Mario, right, to the commercial mainstream level. And I think that's really, really exciting. So Ubisoft has basically made two announcements in like the last 2 weeks, which I thought that was really, really cool. Right. And so the first is that they've accepted Axie Infinity into their Innovation Lab program. Then the second is that they've actually launched their own blockchain-based collectibles program. And that's they're trying to actually raise money for UNICEF, so for a good cause, so going towards charity. So they've actually taken their kind of commercial branded game Rabbids, I think it's called. So I haven't actually played the game myself, but it looks pretty cute. And you can see that basically this yellow character down there, I guess that's a rabbit, right? These guys will be transformed into kind of digital collectibles in the future. And they've created this new version where there's basically these rabbits can be traded openly on the blockchain market, right? And people can basically pay for them and buy them off each other. And yeah, I think that's super exciting. Again, this is a mainstream gaming studio with huge titles under their name, qualifying that blockchain is here, and it's going to be a part of the the gaming world in the near future. So I'm really excited about that. Lastly, I just say so if you guys are interested to check out Axie Infinity, I will put a link into the comments. Go check it out. It's kind of like it's a digital pet universe. So I've been looking for a better comparison than Tamagotchi, but it's a very advanced version of like Tamagotchi, where you can breed these animals, you can trade these animals, you can purchase lands where these animals are actually going to do battles or adventure through. And those lands that you buy, the digital land, is actually tradable in the future, right? And so there's an open marketplace where all of the in-game assets are actually tradable. And so Axie Infinity actually is part of this play-to-earn universe, and I think that's something that's growing right now. Is play-to-earn means whilst you're playing the game, you're basically earning in-game tokens, and so we're all used to this, right? You've already got it in the most commercial mobile games like Candy Crush, or in now even in social media apps. I looked at we have this live streaming app here called Kumu, and people kind of gift each other diamonds or tokens in it. And if you can imagine those tokens actually being convertible to cash or convertible to different types of assets, or convertible to whatever you want. Basically, that's what these play-to-earn platforms on blockchain are now offering. Any thoughts on this, Luke?
Yeah, it'll be interesting to see what happens with those. Sorry, as you can see, I've got a cat harassing me. I guess I mean it's not this isn't a unique idea. I mean this has been done. Yeah, the idea of currency in game for benefits or whatever is by no means unique. It's just that most game companies keep the economy internal. Whereas in this space, at least they're making it internal from the outset. And I think I did write an article about World of Warcraft a couple of years ago when in Venezuela people were able to earn more money in US dollars playing World of Warcraft than they were basically working a full-time job due to the complete devaluation of their currency. And that situation since then has only gotten worse. So, being a WoW gold farmer is actually a reasonable job if you're over there. It's still better to mine Bitcoin because you can mine Bitcoin for about $500 US per coin on average. So it's a good country to mine Bitcoin in. But yeah, I mean, it's by no means a good idea, but it's good to see. It's going to be interesting to see how they build these games from the ground up. And I mean, the more interesting part is going to be how much of the pie that Ubisoft will take, because any of these big companies, of course, they're there to earn money. There's no problems with that. What's going to be interesting is to see how much of how they're going to benefit themselves. I mean, that's what they're going to do. They're going to have to take some kind of profit out of the way that these tokens are transacted, or how they're earned, or how they're spent. However, it can't just be a solid flat market. I mean, Ubisoft will need their pound of flesh, and to see if they get greedy or they go reasonable. If they go reasonable, I mean, it could be a very, very big success. But yet again, that depends on the underlying game. But if they go greedy, it will just be a complete waste of time. So at least Ubisoft's doing it, and not someone like Activision, who are well known for doing silly things like sort of taking it out on their customers. But it'll be interesting to see. So long as I guess the only thing that will kill it, and the only thing that if people were investing in something like this or looking to get involved in it, the only thing that will kill it is if they make it a play to win. For example, some people can play, but it's really difficult, and you can earn tokens by just playing and being involved in the game. Happy days. But then it's what's going to break it is if you have $100 US, you can skip, way past everyone else by basically buying tokens. The same way that gems and all that kind of stuff work in mobile games.
I see.
If you like Clash of Clans and I don't know what the other ones are, like whatever they all are, but Clash of Clans is the most well-known one. If you have enough gems, you can just basically build a huge base and you're automatically, a machine. It's pay to win. So as long as we don't end up in a situation where there's a pay to win element where you can just basically jump ahead of everyone else just by paying some money, then yeah, it'll be interesting to see. It'll be interesting to see how they roll it out to make the incentive work, and also not break the game and make it unfair.
Yeah, and I think that's basically the biggest challenge right now is that they are coming up with these completely brand new incentive models that are based on, whether it's based on crypto or not, it could just be regular tokens, right? But you still got to keep incentivized to stay in your game, right? And I have to hand it to kind of like Axie. They've done pretty well on like keeping people entertained like throughout their season. So they keep launching different seasons, bringing in like different types of tournaments, and then they also released like a mobile version of their game, which again, it's in terms of like portability and like who can play it, and like the gameplay is completely different. So I think that's like really great. And then what they've now introduced is like, the more you play the game, the more you earn their in-game currency, and that now can be converted into cash, or can be converted into different types of cryptos using exchanges. So mainly decentralized exchanges. And that's the really exciting part, right? Because like in the future, like these exchanges are going to be just trading everything, right? You can imagine like most things are just going to go out there, and it's almost going to be unlimited number of like different things you can trade. Which is going to
be. Yet again, the thing we always need to be conscious of when we look at markets is to assume that there's going to be is without liquidity, it's essentially useless. Like there's of the 5,000 or 6,000 coins, there's probably more now, but let's just say the 6,000 of the 6,000 coins out there now. 5,000 have no liquidity, and you could be doing everything you're meant to be doing to earn those tokens, but if they haven't got liquidity, it's a complete waste of time.
Yeah, that's true.
So yeah, if you want to have a look at a good token that works like that, how that works right now in the real world is BAT. So basic attention token is something that's used. It's in conjunction with the Brave browser, but basically the idea is it's a good model to follow. Basically, it's like if you're a viewer, you earn BAT. If you're a content provider and people are watching your content, you will earn BAT. But then if you're an advertiser, you pay BAT. And so the idea is that in the same way that it's sort of like, in the same way that YouTube would work, it basically decentralizes that so that, you can't bot your earning, you can't bot your followers or anything like that. Everyone's got to be a unique user. So that you can't just create, you can't go, as a content creator, you can't just go and buy 10,000 subscribers, say. And because it's all on the blockchain, it's all a lot more legitimate. But essentially, as a content provider, you earn money from obviously people watching your content. And in the same note, people who are watching your content and watching ads earn BAT as well. So you sort of split it. So there's an incentive to actually watch somebody's content. Obviously, if it's not enjoyable, you're going to watch something else. But the way that it works is it's designed to keep the users on the wheel, which is important. It's important to keep the users still spinning on the wheel so that they've got, if I watch another video, I'm going to get another 0.01 BAT. That's good. And if you're a serial user of a platform and you're commenting and sharing and liking and you'll earn more. And then in the same way that as a content provider, you're also being rewarded with BAT for the more people that do it. But it also means that the advertisers have a much better idea of what content they need to put their money behind. So it makes the whole process more efficient. So for example, the kind of ads that I get on YouTube, when I watch it, is the kind of stuff that I would never ever buy. So essentially, that marketing money is wasted on me.
Yeah.
But if they had a better idea of who I was and blah blah, then we're better. And that's what this product is designed to do. But that's just a side note. But that's actually an interesting one at the moment. And actually, it's going to feed into. I'll talk a bit more about that when I start my session. But yeah.
Sure. I mean, on that note, let's jump on and let's throw up your slides.
Okay. So the first thing I want to talk about, I don't know why this cat is bothering me so much today. I'm just going to let her do her thing and just won't worry about it. And she comes again. I was doing an interview which I'm going to release later in the week on my channel, and she actually jumped up on my laptop and knocked everything, boom, mid talk, boom, everything off. It was very annoying. But anyway, so the first thing I want to talk about is that it's quite interesting that in the United States, a crypto founder has been sentenced to 7 years in prison for a $25 million scam. This was Centratech, which is a company that a lot of other scams at the moment are doing it. And I did talk about this last week with a scam that I got invited to their pitch, and then I basically spent 2 minutes in there, and I was like, "This is definitely a scam." And I'm just gonna have to get this cat over here. Come here. I'm sorry. It's just I have to lock her out next time. Yeah, and so what happened?
I'm pretty sure the guys online they enjoy having her around.
Yeah, no, she just wants attention. And so what happened was this company was launching a credit card that you could use your cryptocurrencies to pay, for all your stuff for. And I would be honestly very skeptical of any company that was unproven, that was launching a credit card service to spend crypto, because this is a common scam. And if you're paying attention last week, I did name the company. But if you're in Malaysia, for example, and you get pitched by a company that might be a crypto exchange that's also offering a credit card, I would be very, 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 I would spend a bit of time to do a bit of research to work out if the offering is legitimate. And I would also say that anyone who's trying to compete in the crypto credit card space has Binance to contend with. And at the start, we talked about how massive Binance is. And I'll be honest with you, there's no competition. So yeah, that's about that. Anyway, so this company basically went out and said, we can go to Visa and MasterCard. You can spend your money in all these different places. However, they never had a partnership nor a license with either of these two companies. So they were basically completely full of it. They made fake claims about the CEO. So these guys actually went out and said that the CEO was this massive dude who had all this experience in the world and blah, 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 made a fake LinkedIn profile, made a fake person to be the CEO. And then they sold him as being this guy who takes companies big and and we should all invest. This is why it's going to happen. But the guy didn't exist. So they just literally made a guy up and made him sound like he had a great thing, which, funnily enough, is what the company I talked about last week is doing. And so basically they did an ICO. This is the one that was backed by Floyd Mayweather and DJ Khaled. And then they came out and it basically turned out that these dudes just took all the money themselves and then tried to get out, but and the celebrities themselves got charged, which is a good thing. So they had to pay fines because they were complicit in this. I'm not suggesting that they knew it was a scam, but essentially, I think if you're an influencer or you have a following and you're selling your opinion to a company or you're trying to promote a product, you at least need to have some kind of underlying knowledge as almost a duty of care to your base to know that this works. Like, if you're a beauty person and you've got this beauty channel and you're talking about makeup all the time, you have a duty of care to not recommend that your subscribers or your viewers or whatever put sulfuric acid on their face, and know that sulfuric acid is bad to put on your face. So I mean, like, things like that, because if you are an influencer and you do tell people to put sulfuric acid on their face, it'll give you this amazing, it might hurt at the start, but it'll get rid of all your pimples. There will be people dumb enough to do it, assuming they can get their hands on sulfuric acid. And that's the issue with this thing. And it's actually, I think it's actually good that they were fined, because it also shows that you can't just sell out and be devoid of consequences when people get scammed.
What's the name of this company?
So that's that. This was called Centra Tech. So Centra Tech, Centra, not Centura, Centra.
Okay.
Just there, Centra Tech. So not a big ICO, 25 million, which is still ridiculous, but not a big amount. And I would be incredibly, as stated a number of times now, I would be incredibly skeptical of any ICO that's running that combines an exchange with a credit card, unless it's a proven exchange and a proven credit card. Like obviously Binance is fine. Like, they've been around for so long, they earn so much money. It's not the end of the world. Now, the other big thing I want to talk about is sort of the big bull run we've seen in DeFi this week. And so it's sort of the big darling of the markets at the moment. And yet again, I've got that interview coming out with Harpreet where we talk about DeFi and break it down and all the benefits to people in the world. But the big thing that sort of happened in the past 5 days is this token called Comp. Now, Comp is from a token called Compound. The way that it works is that, and there's a number of products like Aave does this. MakerDAO does this, and a few others. There's actually quite a few that do similar things, where it's basically lending. You have the option to lend your crypto, and the other person on the other side has the option to borrow it. And then, depending on the ratio of borrowers to lenders, and the supply versus demand basically will change the interest rates. So it's actually, I've actually got their website here, and you can see it here. So without getting too complex, without getting too complicated, as you can see, something like they must base it on about 28 to 30% as a baseline. But essentially, you can see here the basic attention token. There's $27 million in supply, and there's $24 million in borrowings. So it means that the interest rate you earn annually is quite high. So supply, if you supply it to the market, you get 26%. If you borrow from the market, you have to pay back 33% interest. So, I mean, that's a fairly good return. Obviously, you've got to factor in the underlying volatility of the asset, but it's pretty cool. Whereas something like Tether, the interest rate here is absolutely obscene. So Tether is just the US dollar. They've got gross supply of 245 million. You've got a gross borrow of 153 million. If you're lending, you can get access to you basically lose access to your Tether, but you get paid 9.4%. And the borrower gets access to your Tether, but has to pay back 15%. And that's obviously how the DAO, which it's moving towards being a DAO, makes money. Now, in order to get Comp tokens, now what Comp is, COMP is the token that powers this network. So the way the Comp token works is that if you're a participant in the network, and I'll show it here, I'll go to Comp. If you're a participant in the network, you actually get a share of all Comp tokens minted per day. So as you can see, if you're giving Tether, you're getting, for suppliers and borrowers, you're getting 1,102 Comp per day, distributed between all borrowers, all suppliers, sorry. And then on the same thing, if you are doing BAT, you're going to be getting 283 per day. If you're borrowing BAT, you can get 283.99 per day as a borrower. And what happens is basically that you can either stake or you can borrow or lend someone's tokens, and you get an interest rate for doing that. The company takes a margin in the middle, and then you obviously get access to these comp tokens. Now, what the comp tokens allow you to do is become pretty much, it's like if you could vote for the members of the Federal Reserve Bank, the people that make big decisions about banking, then obviously the idea is that the people who participate most in the monetary system get the right to vote. In the same way that this works, the more money you lend to comp and the more money you borrow from comp, depending on which way, like the more active a participant in the system you are, the more comp tokens you get. And what comp allows you to do is, if you own more than 1% of the total supply, you can put up things to be voted on. You can actually set the agenda if you have more than 1%. And then obviously, no matter how much you have, you then have the ability to vote on what people have put up in the agenda. So there is actually, if this token ends up being a thing, if the network ends up being a thing, then the underlying tokens will be obviously incredibly valuable. Now, the price gain from this token in the last 5 days, and I don't think people should get too excited to go and buy it today, but when it first started listing, it came out at about, sorry?
Went up nearly 300%, I think.
Yeah, from nearly 300%, but it started at $70. Went down to 53, and then it just went dum dum. This is a 4-hour chart. If I go to a daily, it's a bit. This is every day. Boom, 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 boom. Obviously, had a big night last night. It got up to 250, and then back down again. Now that's. I mean, obviously, it's a bit of a. Oops, that's a weekly. Obviously, it's a bit of a. It's a bit of a bubble. However, it is obviously interesting to note that there is obviously supply and demand for this. People are buying it. Now, whether these people are smart investors getting into a project for the long term that they believe in, or complete idiots just buying something because they think it's going to go up in the short term, getting greedy. The only thing I will say about this is that supply is very limited. So there's only 300,000 tokens distributed. So as a percentage of market capitalization, it's very, very small. And tokens are getting distributed, and it's weekly, depending on how much you've participated in the unit. So the idea is that if you're a participant in this market, I mean, there's still a bit degree of risk there, but I wouldn't say it's insane risk at the moment. There's a degree of risk with everything. But if you want to sit back and earn money on your crypto, a lot of these DeFi solutions allow you to do that. And this one here is obviously fairly popular. Because you not only earn an interest rate, but you also get to participate in the future of the network. So it basically makes the whole place a DAO. Now, once the tokens are only basically used for voting. So should you go out and buy comp tokens? If you have no interest in voting and you have no interest in any of that kind of stuff, I'd probably say no. Because the tokens aren't, as they become more plentiful, they're going to basically tank. I mean, a lot of this is the silly hype stuff that we all deal with when we're in a crypto boom. However, the underlying idea of how this whole network works is actually quite appealing. In that, you can if you get set on something like this early, if you participate in this network, it's like you can basically earn your seat. You can earn a seat at the Federal Reserve for life. Which is also very interesting. So that's a fairly powerful network that's just come out. It's a powerful idea. I wouldn't say the network is powerful. But I think that, this is an interesting thing that people should be looking at, not necessarily maybe jumping into, but if you want to understand how this stuff works, this is sort of how it works. Now, there are a number of other players in this space. Where are we?
Luke, before you jump into that, can I ask some questions?
Sure.
So, firstly, okay, so the 300% run, I'm also trying to, I'm wondering how could it happen so quickly in such a small space, like a small space of time, right? Is it literally people just going in and pumping up the coin? Because I've noticed that Compound isn't even listed on kind of like very big exchanges. It's kind of like on exchanges. And as you mentioned, right, the circulation is quite limited, right? So it's not that easy for people to get in.
Yeah, that's true. That's one thing. I'd also say that it's basically this. There is $300,000 worth of supply, and there's more than $300,000 worth of interest.
Okay.
That's it. It's the supply. So, but I mean, when you calculate it out, I mean, like the amount of tokens that have been listed, it's the first week's distribution. So it's everybody in a mad dash to try to get a hold of them. I mean, will it go up again next week after the next distribution? Maybe, but the rise will be less and less and less. And I think there is a bit of a hype behind this one in particular, but there's also a big hype. This is the hype token in the hype run. You know what I mean? You know, DeFi is the current flavor of the week. DeFi is the current flavor of the week, and comp is the comp is going to be the most popular in that flavor. So I think there's a reasonable degree of that is how that works.
And the reason
I might make a video. I might make a video on this week. I've got to make a video on this and other DeFi stuff, but I might make one on this week if people want to understand how that works. But I mean, the DeFi space is really cool at the moment. Obviously the most important thing will always be how many users it will be able to pick up and how many people it will be able to help. Because if it picks up no users and doesn't help anybody, then it's essentially it's all these people grandstanding and talking about how we're going to bank the unbanked and all this kind of stuff. But unless the unbanked actually use it and become banked by crypto, then essentially it's irrelevant. As the age-old saying goes, if you have a customer and they don't, you're trying to solve a problem for the customer, but the customer doesn't see that there's a problem, then there is no problem.
So, Luke,
you then have no customer.
I've got a similar question to what. So we've got a viewer here, Ian. I'll just throw up the question on the screen there, and I'm also wondering, what is the incentive to hold comp? Is it really to have that seat at the board of the Fed? Is that what you're saying, or are there any shares difference?
No, well, I mean, what you're doing is essentially you're putting your tokens, your existing tokens, and the market for comp is there. I mean, they're all the coins you can use. Wrap BTC, which is just ETC on Ethereum, Bitcoin on Ethereum, USDT coin, Ether, DAI, BAT, Augur, OX. I think that's about it. Oh, that might be it. There might be more. There you go. There's all the markets that they have. Psi, which is legacy DAI, Augur, DAI, Ether, blah blah blah. They have all these things. Obviously, it's an Ethereum DeFi product, so most of the tokens on Ethereum. So what you're doing is essentially you're giving them your tokens or your coins, whatever, and then what they're doing is they're then giving you an interest rate back. So your interest rate is being earned by what you're putting into the network. The comp tokens are a kicker, and this is why I'm saying that the value of them is I think that a value is currently overstated and due to hype, because if you went and bought up the entire current supply of comp, you would have absolute control over all the voting and all the issues you want to raise. So you can pretty much control the entire governance of the network, right? But it's going to cost you at the moment, quite a bit of money to get that done. However, in a week's time, there's going to be a 100% increase in the amount of available tokens. So if you want to maintain your control, you've got to then buy them all up. And then yet again, following week, it's going to increase by 30%. Obviously, the increase is, it's going to be the same amount is put out every week. And so what has to happen? I mean, so to maintain the value, you need to have someone who either wants to maintain their percentage or a number of people who want to maintain their percentage to have control of this network. Now, that's good. I mean, there may be people who want to do that, but they're only going to want to do it at a certain price if there is a commensurate increase in users. If there's only, at the moment, I think there's 23,000 suppliers, 3,000 borrowers. If that ratio, or even if that amount does not increase, then I mean, in all honesty, you're sort of if that amount's had, there will be probably more people coming in. I mean, at the moment, I don't think this ratio will hold because, as we know, the way that markets work, if you're putting BAT tokens into this market, you can earn 33%. You can earn 26%, and you're going to be earning a share of your comp token. You're going to be earning a share of comp tokens. Now, for the average investor, I mean, like they've got 27 million in there, so and they're getting 100 tokens or 200 tokens being distributed for BAT at the moment per day. So unless you're putting in $1 million, you're not going to be getting a heap of comp.
So Luke, I get why they would be interested to supply BAT, but why would they be interested to borrow BAT? I mean, what do they do with the borrowed BAT? Do they put it into another instrument?
In all honesty, it could be that people are basically just borrowing and supplying to themselves. They might take the 5% hit in order to get a bigger share of the comp tokens that are being distributed. I don't know. I mean, that's just a theory. But I mean, that's a way to earn tokens. Essentially, you're just staking to earn tokens. And there's nothing wrong with that. If you believe that at the end of the day, 5% to get more comp tokens is you're probably going to earn more in the value of the comp token than that. But that arbitrage will close up. So BAT is still a used token. So there would be people who'd be using it to trade with, to speculate on. I don't think anyone would be, say, borrowing BAT tokens so they can go do an advertising campaign on Brave. I don't think people would be doing that. The market's just not there for that kind of thing. I mean, it could be there in the future. It'd be people would be borrowing BAT on the belief that more people are going to be buying BAT, to invest in. And then it's a way to get leverage, basically. And if you think BAT's going to go up more than 33% in the next 12 months, why the hell wouldn't you? You can, you'd be able to make more money than just sit on it. So there's that as well. So who knows why people do things, but the thing is that they are, and that's the big thing. Some of the rates though are a bit insane. I mean, as you can see here, OX, if you can lend it out at 7.79, but if you borrow it, it's 18%. So it's huge.
That's crazy.
Ether, you get nothing. Now the reason why is because of the ratios, right? So here, 50% of supply, but this will even out. There's an algorithm that handles that, handles all this. For things like Ether, a lot of people are supplying Ether. $147 million worth of Ether is being supplied, but only 243,000 of Ether is being taken. So it's a 2.04%. So that's why the borrower API, as a borrower, you're always going to pay about 2%, because but then as a lender, you're basically getting nothing. And there's a way that they've worked it out. They've got some algorithm that works it all out. You can have a look at the website and go from there. But that's the big one there, and that's sort of what I want to talk about today, is because it's a bit more of an interesting play. So, but if you want to have a look at the other players that are in here, actually, there's a better chart here. MakerDAO, obviously, Maker's the biggest. With the biggest amount of assets. However, interestingly enough, Compound has overtaken them in market cap, despite the fact that their USD value, like the underlying assets, aren't as high. Aave, 84 million, but the market cap of Aave is a lot less. Aave used to be called Flend back in the day. DYDX and InstaDApp. These are all lending apps that basically are in the same category as Comp. Now, MakerDAO, they'll work a bit different, but if you have a look at the market cap of these same things, MakerDAO is only valued at 546 million, despite the fact that it's got 487 million locked up. Comp, the value of the token is 785 million. That was actually at a price of $78, so it's probably well over a couple of billion now, despite the fact that the underlying asset's only 163 million. So, and then Aave, I don't think even they're in there at this point. So it's a bit of an interesting one, and this is yet again. We're still in crypto, so it's still the Wild West.
Yes,
so you've got to be careful. You can't buy into the hype. I personally wouldn't be going out and buying comp tokens. If I had them, I would have sold out at like 200. That would have been me done and dusted. walk away with a reasonable profit. If I was participating in comp, I'd be selling my DAO tokens every week. The value will go down as supply increases. It's basic supply versus demand. I'd earn my tokens and flog them every week, and then I'd take my money out of the network once the tokens weren't worth it anymore and the interest rate died. So what you'll see happen because of the popularity of this token and people know that they can earn it, is they will more people will participate in this network. And then I think as we see here, that chart we looked before was 140. Now we're looking at total supply volume. Yeah, it's still about total supply volume here. $679 million are in supply at the moment. So you've already seen that compared to what it said before, where was it? Oh, it was this one. Compared to where we were before, it says here that Compound has 338 million. So even when this article was written, which would have been on, where would this article be written? It should be at the bottom here, right? Nope. I don't know. I think this would have only been written in the past couple of days. It would have been written could have only been written in the past 4 days. There you go, June 19. So at 4. So whatever. What's the date today, actually? The 20th. So this was written yesterday. Even between yesterday and today, it's gone from 338 million to 679 million. So what you're seeing is more people flooding into the market, which means the amount of comp you will earn for staking or borrowing is going to be heavily reduced or halved. So if you earned 100 last week, you're going to earn only your 50 this week. And as long as comp is expensive, you will earn less and less and less, which makes it harder which is I think, and then that means that people may pull their money out of this market, which may decrease the price of comp. There's a lot of risks here, but I think that in all honesty, the value of the token is not that great, and I think that a lot of this is just based on hype because at the moment there's no distributions. I will say one thing though. Actually, this is one thing. Because it's a DAO, it's going to be a DAO, and the people that own comp can vote on whatever the hell they want. So it means that we could see a point where the users will be able to vote themselves the right to earn interest or to earn distributions from the margin earned by the DAO. So it means that if someone comes up and says, look, I reckon we would need a higher interest rate for Tether, the whole community can vote and say, yeah, we do need more for Tether. You're right. And so then they'll up the interest rate for Tether. Obviously, it depends on if you're a borrower or a lender. You'll have a different level of, it's better to be a borrower, to be honest, in this market. If you want to earn comp, you're better to be a borrower.
Are those going to be the main kind of governance questions that they kind of vote on?
Oh, you can vote on anything. It's a DAO. They can say, we want to cut out the profit, so we want dividends. So to answer your question, yes, you could end up earning dividends on comp. At the moment, you can't, but later on they can, because it's a DAO. So you can say we're going to vote on the fact that we should all get, 1% of profit should be distributed to investors every week. Done. Boom. And then, but then what that does to the underlying organization, and because obviously you got to think about the cash flow of the company. They still got servers to run. They've still got a website to put up, and blah blah blah. How much free cash flow have they really got to then be paying dividends? There's a lot of things to be considered. So some of these decisions might end up being it could end up being the death of the whole thing. But just remember that we're still in the experimental phase. I mean, there's been no organization. I mean, there are pluses and minuses to democracy, in all honesty. But you've never seen a company run by democracy. And so we'll see what we get. I mean, for example, I don't want to get into a political discussion, but yeah, basically democracy can be a bit of can lead to interesting choices. Sometimes good, sometimes bad. So that's the same thing here. If you get a whole bunch of greedy people who are like, 100% of profits to be distributed to all users, then it means the underlying platform has no way to keep the lights on, and therefore the bills don't get paid and the whole thing shuts down and no one earns any money and your comp's useless. So, yeah, it will be interesting to see how it all plays out. But if you're interested in participating in this network, I'm not suggesting that you should or shouldn't. I'm just here to talk about interesting stuff that's happened this week. And if you, but just remember, number one is that this is by no means a well thought out. I mean, probably well thought out. This probably is well thought out, but it's not a tried and tested business model. This is still experimental. We don't know how the whole thing's going to play out, and it could be the best thing ever. It could be a complete disaster. So I would not be going out and putting my life savings into something like this. And I would, but I mean, it's an interesting thing to follow and make your own assessment on. And there are other platforms like this, not exactly like this, but there are other platforms that have not had the hype. That if you believe comp is true value, then it means that the other platforms have to go up in price to match comp's valuation, and Luke, comp will have to go down.
Luke, you mentioned you're going to be doing a video on DeFi projects.
Yes, I've got an interview. I'm going to release that on Monday, hopefully. So Monday or Tuesday, I'm going to push out an interview that I did with Harpreet Maan from Malaysia. He's one of the most legitimate guys in the blockchain space from a development perspective. Actually, I think he's legitimate all around, but very, very well-known guy, very, very smart, and we talk about DeFi. And then I'm probably going to do a video after that, just about pretty much summarizing in a much more succinct way what we've just talked about with DeFi projects and comp and how that works.
Yeah. So also, it's probably a good moment also if Jason's still on. Maybe so our partners from Malaysia, Bitcoin Malaysia, actually did a DeFi week where they hosted about 5 different DeFi projects and went through some of the projects in detail, and they have some videos up on YouTube. So if Jason, if you're still on, maybe you can drop them in the comments so that people can find your videos and read up about DeFi and familiarize themselves in the space. There's another comment here from Luke. From Ian, Luke. So let me bring this up on the screen before we drop off today. So Ian mentioned, looks like Celsius Network missed this opportunity, but I guess it would be weird for a centralized platform to turn into a DAO.
Well, I mean, Celsius, I mean, like I said, Aave, Celsius, all these platforms have been around for a while. I mean, Celsius has been around for a while, but I mean, Compound has been around for a while as well, but they've only just, they didn't just prop up last week, but they've sort of obviously released their mainnet only recently. So the same as Celsius. I mean, Celsius has been around since 2017, 18, and same as Aave. I mean, Ethland has been around for a long time. However, yeah, they're not DAOs. But I mean, I don't think that is a plus or a minus. I think that most organizations shouldn't run as a democracy. Like, I mean, like an organization like McDonald's will not be where it is if you had 30 people all voting on the best course of action for the company. So, I mean, there's that as well. So, I mean, this is still, like I said, this is interesting because it's experimental. Don't think that by any means that this will automatically be the one platform that everyone goes to for their borrowing and lending and whatever. And I think this is the more risky play, is this one, compared to things like Aave and Aave, Celsius, and the other lending platforms and the DeFi platforms. But I'd probably say this, if this complete thing was a flop, comp would still be at, 300 million supply. They wouldn't be at nearly 700 million. So I think that that has been one of the best things for marketing. I think it's been one of the best things for their marketing ever, has been that rise in the underlying price, because now people want to get in here, borrow, lend, and get access to those tokens. But yeah, I think that I don't think that any of the you never know what's going to happen with all the different suppliers, and I think that we're still a long way in this space from seeing a single dominant player that's going to be the decentralized lending platform that we all use.
Right. Right. Yeah. All right. On that note, let's wrap it up for the week. Luke, maybe you can let the guys know how to get in touch, and also what the link is for your YouTube channel.
Oh, I'll go to that. Oh, I don't even know my channel's not big enough to have its own link. But if you want to get in contact with me, I mean, you can either get me at Fortifex, so have a look at the website. All the emails are there. So FORT. I'll bring the website up. It might be easier. I'll go over here. So if you want to get me, I don't know what's happening on my internet. Always good. And then
You might need to share the other screen.
I'm going to do that. I'm just going to drag it over.
Okay.
So there's our website there for Fortifex. It's still being built, but there's all the fun stuff that we do there. And then my channel is this one here that looks like this. A beautiful photo of me on the front. So, yep, that's us there. If you want to have a look at some of the stuff that I've done, but I'm going to move more into, and I think we did the Goldman Sachs thing last week. I'm going to try to move more into content like that, but we then also do the interviews with some of the major players in the Southeast Asian crypto space. But I'm going to try to do a bit more content. So I've actually been cleaning out the room that I'm in now to sort of create a separate space so I can make more interesting videos rather than just doing the standard silly format that I've been doing. But the process of doing this stuff is actually pretty interesting. It's not as easy as it seems, but it's also just the creative process is actually very rewarding. But anyway, that's me.
So yeah, look for Luke on fortifex.com. That's correct, is it?
Yep. Or Blocksiders is the YouTube channel.
Exactly. So Blocksiders on YouTube, and then for us on BlockchainSpace, add us on Facebook. So BlockchainSpace PH, and then on YouTube, just BlockchainSpace. Thank you very much, guys. And if you have any thoughts, any reactions to our videos and our content, leave them in the comments, and feel free to get in touch. Again, find us on YouTube and on Facebook. All right. Have a good week. Have a good weekend.
All right. Thanks, guys.
Take care.